Well, stocks in China taking a hit today. Hong Kong's Hang Seng index falling almost 2%. It's now officially in a bear market. This after China's central bank cut its one-year loan prime rate. This key indicator for most of China's household and corporate loans was trimmed by 1/10 of a percentage point in hopes of the country countering its growth slowdown. That was, though, a smaller decline than some were anticipating. China's central bank also shocked investors by leaving its 5-year loan rate, which is mainly used to price mortgages, unchanged. With China's property meltdown elevating its financial stresses, how much more can the country endure? Yahoo Finance's Rick Newman is here to weigh in. Rick, you've been looking at the tea leaves when it comes to China here. And a lot of investors in the U.S. have been focused on this issue. It doesn't look like that China is getting out the bazooka here when it comes to stimulus.
No, and some analysts say that it needs to get out the bazooka. So China's economy is kind of a mess right now. And I go back a couple of years, Julie, when there were many forecasts that China's economy would eventually eclipse the size of the U.S. economy, perhaps by 2035, 2030, perhaps even sooner. That does not seem like it's going to happen. That may never happen. There are real problems in China. So we talked last week about problems in the property sector, well known, but there's basically an ongoing property bust there that is now apparently bleeding into the financial sector in China. Some are calling it a possible Lehman Brothers moment in China. So the question here is, should we worry about this? And there's a new note out from Capital Economics this morning saying the effect of China's economy on the global economy and on global financial markets is typically somewhat overstated. So this is reassuring. If you're a U.S. investor, it says the main concerns about that U.S. investors should have are American companies that have a lot of business in China, that do business there. And they singled out Apple and Tesla as two big U.S. names that do get a fair amount of their revenue from China. So some possible risks there. But it is not likely that this is going to bleed over into the global economy or the U.S. economy and cause some kind of contagion. Jared would remember this. Maybe you remember this, Julie. In 2015, there were problems in the Chinese economy that did affect U.S. markets for 6 or 9 months. And we had a real sell-off here because of worries in China. But that turned out to be a little bit misplaced. And I guess Capital Economics is saying that may be the case this time as well. Don't worry so much about problems in China if you are an American investor.
I was in high school in 2015, Rick. No, I'm just kidding. One other thing that has been talked about with regard to China is exporting deflation, right? The idea that there has been deflation in prices there, and because they are such a big exporter of goods to the U.S. and elsewhere, that might actually help the inflation situation. Given, the research that you've been looking at, how credible is that idea?
Well, China has been exporting deflation for decades. The question is, I think the question really is, can they still do that? So you'll see a lot of headlines about the U.S. decoupling from China. And what's actually happening there is the U.S. trade deficit with China, which drove former President Donald Trump bananas. He said it was way too high. That's the whole reason he put his tariffs on a bunch of, hundreds of billions of dollars worth of Chinese imports. That trade deficit is actually getting smaller. We are doing less trade with China, but it's not falling off a cliff. So most of the stuff you're going to buy on Amazon, toasters, smartwatches, stuff like that stuff is still going to be made in China. So China, to the extent it can export deflation, will still do it. That was interrupted during the pandemic because of all the things we know about. Shipping costs went up. It got harder to get stuff. So China was not exporting deflation, and I think they are getting back to that. It's just probably not going to be as pronounced as it was for 20 years, say, let's say leading up to 2020.
Yeah, it feels like there have been some structural shifts globally. Rick Newman, thank you so much. Appreciate it.
See you, Julie.